Technical analysis look on Tesla. So this is intraday, currently 8:30 a.m. Pacific Standard Time here. So what I kind of want to look at Tesla pretty much flat on the day. Started off the day with a nice pop higher, along with the rest of the overall markets. So one thing to kind of keep in mind, anytime we're in, an environment that we're currently in, which is, an overall sell biased market underneath macro supply, a bear market, right? So anytime we're in a bear market does not mean that, from the time that the bell opens in the morning to the time that the market closes, that every candle is going to be red. It does not mean that. You're going to get your dead cat bounces. You're going to get your periods of sideways consolidation where the stock is really not doing anything other than, chopping around and just moving sideways. And then you're going to get your flushes. You're going to get your inside bar days, followed by your green days, followed by a big rug pull the following day. So when we kind of look at what's going on here with Tesla on the daily chart is below every single macro level of supply. So why is this significant? Well, when a stock is below its macro levels of supply, meaning 50-day moving average, the 200-day moving average, the shorter term sentiments, which is the 5 and the 10-day moving average, the value is still to the downside. The momentum is still to the downside. Now, is that to say that a stock like Tesla can't rally 30, 40 points, close green on the day? Absolutely not. It's 100% possible. On those days, you will be able to take trades, day trades, scalps to the long side. You just have to understand, and this comes with experience and it comes with, a feel. Okay. So there's a feel to it. We already know the vibe. We know the sentiment is down. We know that stocks are under a lot of selling pressure. So for example, I took two trades on Tesla. One of them was a short position. Obviously that was my bigger position, my bigger win. And then the other one was just a scalp long. So if we kind of look at what Tesla did, right? So if we kind of look at what Tesla did off the open, in pre-market, we did get a nice little push higher, and then we did get a pop over these pre-market highs of around 819 all the way to around 825. For anyone who's a hyper scalper, someone who's looking for that quick in and out, break pre-market highs, get into the trade, there was your potential trade. But again, I would only advise, people have been doing it for a very, very, very long time. People have had 1,000 of those type of scalp plays under their belt. So what we're kind of looking at here, we get this initial flush off the bell, and it's right here when we come down to the 200-day moving average on the 5-minute time frame, where I kind of start to see Tesla's price action start to catch, and then this green candle reclaims the 200-day moving average, and then we get this second candle that pushes over the 20, closes over the 20. That price was currently around 809, 810. This is where I got in, and this is where I took my entry on a long position. Now, here's what I want to focus on and point out. The sentiment, the market is down. This is a bear market. Am I looking to get into Tesla at 809 because, one or two green candles and tell myself, yeah, this is coming back, to previous days highs. This is coming back to all-time highs. No. What I'm looking at is I noticed that Tesla had a nice little washout. It did catch and find some support off of the bell. We are making a little bit of a push higher. Potentially there's a room for a scalp here. 810 is when I got in. And then literally within 5 minutes, the candle not only confirms it, but explodes all the way and closes at a price of around 819. So if you've ever traded Tesla before, you know that you don't need 20, 30, 40, 50 points. Of course, that's nice, but 5, 6, 7, 8 points on a stock like Tesla, especially if you're trading options, is a fantastic move. So I sold in the run up of this candle. My hold time was maybe about 3.5, 4 minutes on this. Obviously did not catch the second candle's high wick here to the upper Bollinger Bands, but that's okay. What we have to understand is this is what I was looking at after. Okay, so this is going to be my entry here, and I'm going to sell on this candle. What I'm looking at is the day's highs. What I'm looking at is the second spike here. This second spike did not take out the day's highs, so we are making a lower high here with not being able to get up and push price action a little bit higher. So all I'm going to do is just sit patient and wait for my next setup. My next setup is going to be when we start breaking down below these levels of supply, the big 50-day moving average here, as well as the 20 and the 200, you can see down here. So there's two potential areas where you could have taken a trade. You could have taken an early entry below the 20 and the 50, or waited for a little bit of a more macro move on the 200, which is here. And this was the second trade that I took, and I took it here and kind of just rode this down. Now, again, mind you, did not take it all the way down to 740, 774, because that's the name of the game. You're never going to catch the whole move. But for me, when I'm looking to scalp, I'm looking for 2, 3, 4 candles, and I want to start taking profit. So if my entry was here, this is the first candle push lower, this is the second candle push lower, this is the third candle push lower, and normally I'm looking to clear up my position, and that price was around 790, and I got into this stock at around 806. So that's about a 10, 12, 15 point move. Now, mind you, there's going to be a little bit of slippage and fill time and everything. You know, and I trade options, so I'm always going market in, market out, just because I want to get filled on the move quickly, even if I'm going to lose a little bit of slippage, and I want to get out if there's a little bit of slippage as well. But with that being said, you can kind of just see that your macro trades in a bear market are always going to be to the downside. It does not mean that you cannot trade long, but you just have to have an understanding. A lot of traders do not have an understanding. They think that, well, you know what? We washed out, pre-market pushed higher. We got this little bit of pullback. We found some support. Now here we go, baby. We're going all the way back up to the moon, right? We're just going to ride this all day. It doesn't work like that. Levels of experience really pay off in this game here. And you know, and it's a feel. Some people have it, some people don't. There will be some people that may take 5, 10, 15, 20 years to ever get this process. And there will be some people that take 1, 2, 3 months, and they're fully understand their emotions. They're fully confident in their abilities, and they're fully confident. And then I look at people all day long that just don't seem to get it. And it is what it is. It just takes some people a little bit longer, but at the end of the day, it all comes down to you. Nobody's here to hold your hand, and nobody's here to make decisions for you. You have to be able to have the confidence and take your plays, and you have to also have the knowledge to understand that, you know what, this is a bear market. Just because I'm getting a play to the long side does not mean I'm looking for, 50 points on Tesla. Let me get 2, let me get 3, let me get 5 points, let me get the hell out of here, and then let me look for the bigger trade. And the bigger trade is either going to be through the lows, which is here, or it's going to be on your next setup through losing some of these demand zones, which would be here. Either or is fine. And obviously you can see if you would have taken either or, you still would have caught a nice move here. Now we're getting a little bit of a dead cat bounce into this supply zone here. If Tesla does continue to bounce, I would expect it to try to come up to maybe 791 or even 800 before it gets rejected. So I could see something like this happening. Now, can you take a long position here? Yes, you can. For a scalp only, you're going to have to use these lows as your stop and kind of just ride it into these next supply zones. But for me, the bigger trade is to let Tesla do its thing, go ahead and bounce, get rejected somewhere here, and then off that rejection, I want to play it back down. Obviously, you want to be taking profits at the lows and then holding a runner in case we do decide to crack those lows. You've got that nice little runner there. So just kind of showing you guys how you can play stocks both to the long side and to the short side in a bear market.